Welcome to the Student Housing Insight Podcast, where we are putting you in touch with the people who bring student housing to life. I'm your host, Wesley Dees, and thank you so much for taking the time to listen to this podcast. I hope you're getting a lot of value from it, and if you are, please do me a favor and share it with your colleagues. That is the absolute best compliment you can give to me. So thank you in advance for sharing that. This week, we're doing another special Behind the Biz episode. So for those that don't know, that's when I sit down with the founder or a CEO of one of the great companies that service the student housing industry. This week, we are talking about Qira. Now, this is a company you probably have not heard a lot about. Back in October of last year, in 2021, Rent2Go and Hello Rented merged to create Qira. If you don't know anything about those companies, Rent2Go was a rent processing platform, and Hello Rented, how's the best way to describe this? They provided AI-based underwriting for a cash basis versus an insurance-based approach to alternative security deposits. The new company is now a complete end-to-end financial services platform supporting practically every type of financial transaction that occurs during the rent life cycle. So what does that mean? Well, ever heard of flexible rent payments? They handle that. You know what? While I'm on the subject of flexible rent payments, because I know a lot of residents are asking for it, and it's a pretty popular thing right now. Just want to tell you a little experience that I had this summer. Maybe you dealt with this as well. But I was onboarding a new client this summer for asset management services. And one of the properties is at a university where a huge portion of the students depend on Pell Grants and financial aid to, obviously pay for their housing. And so when I asked the client, this was back in July, how have they worked with those students in the past? Because they typically can't pay their rent until, they receive those funds, which typically doesn't happen until mid-September, sometimes even later. And so the client tells me, we used to do, something, have them sign an agreement or whatever, but we're now offering flexible rent payments through another company. And my response was, great, that works. So fast forward to mid-August, and I'm reviewing delinquency for this property. And I was surprised to see a lot of renewal tenants that had not paid rent for August yet. So when I asked the site manager, she said, they're waiting on financial aid. Well, you can imagine my response. So why did they not use the flexible rent payment option? The answer was, they didn't want to pay the subscription fee if they don't use it. So I'm not going to point fingers. I'm not going to name names, but if your company is offering a flexible payment option, make sure everyone knows how it works, because there's not a single company in this flexible payment space that I've been able to find yet that charges a monthly fee unless you're carrying a balance. So just make sure you check into that and you know how that works. But anyway, so after that was clarified with this site manager, I said, hey, we're just at the 18th of the month. Let's get these residents signed up for it now. And then the response was, to use it, you have to be signed up at the beginning of the month and you've got to have a zero balance. Folks, if your flexible payment partner will not let a resident sign up with only the current month's rent due, even in the middle of the month, maybe even at the end of the month, they're not a provider you need. You need to find another partner. And I would suggest Qira, because they will onboard a resident as long as they only owe the current month's rent. So, all right, back to Qira's other services. Have you ever heard of alternative security deposits that we just mentioned? They handle that, and they provide up to 2 times the amount of coverage for a security deposit, regardless if they're using the alternative security deposit or if they just pay out their security deposit up front. And if you choose Qira to also process your property's rent payments, there's a ton of value they can bring to that property in additional services, and it costs the property nothing. So I met the folks at Qira back in May at the Interface Student Housing Conference in Austin. It was their first attempt at marketing towards student housing operators, and I saw some immediate benefits from Qira that you just don't find from any of their competitors. The main one being none of their competitors offer the end-to-end service that Qira does. With their competitors, you want to offer your residents a flexible rent payment option? That's a single company. You want to offer prospects a security deposit alternative? That's another company. You want a company to run background checks and credit checks? That's another company. With Qira, you've got all of that with one company, and they give you so much more. But as I was speaking with them in Austin, I saw some obvious opportunities where they could enhance their services even more for the student housing industry. So this summer, Qira engaged me to take advantage of those opportunities and evolve their services for the student housing industry. And they are now launching Qira Student. So I wanted to use this episode to share with you a conversation I recently had with their CEO, Brian Ball. So let's go ahead and get to that interview. Brian, welcome to the podcast.
Hey, thanks for having me.
Well, I appreciate so much that Qira is using student housing insight to get the word out. I know you guys are a new company. You guys are doing some incredible things. You guys are kind of centralizing a lot of things that we have to deal with as property managers.
Yeah.
And I'm excited for you to share that. But for those that haven't heard of Qira, what's that 30 to 90 second elevator pitch that we all put together? What's that for yourself and Qira?
Yeah, so I think I can get it done in under 90 seconds. So the easiest way is, I'll say, how sometimes it's hard for prospects to be able to sign a lease because they need to come up with all those upfront costs. We solve that problem for you. In addition, you probably have residents each month who are struggling to pay rent and they might need a little help. So we solve that problem too by offering short-term loans to residents so they can make their rent. We do some other things as well. Notably, we have a line of credit that we can offer to properties that allows them to factor the next 12 months of rent so they can quickly and easily access capital when they need it.
I know we've got some owners that will be very interested in finding out more about that. Well, hey, give the origin story for Qira, because I know this is kind of a combination of two companies that recently merged, and would love to kind of hear that background story.
Sure, that's right. So the two companies were Hello Rented and Rent2Go. So they were, doing separate things that were tangentially related. And then in March of last year, they merged, and that's how Qira was born. So, over the last, let's call it year and a half, we've been busy working on merging those two platforms together. And we're seeing a lot of benefit to the synergy that comes from those two platforms being under one roof. Rent2Go was a rent payment processor that would let you go to a fully paperless rent payment solution. And Hello Rented is a security deposit alternative. So putting those together really helps our clients because they can eliminate one vendor and then have all that data in one place. So we're really excited about how well that merger has gone and where we're headed here in the near future.
Well, I know you're not, you're fairly new to Qira as well, but you're not new to fintech and prop tech. Maybe give a little bit of background on yourself as well.
Yeah, so saying I'm new to Qira is an understatement. It's 2 weeks today since I joined the company. But I have been in the industry for about 13 years with a wide range of experience working for one of the large property management platforms, and then going through accounts payable side and then moving over to the accounts receivable side on a couple of startups. And so all of that has come together to really make Qira a great stop for me. So I can bring all that experience and help build this company and take it to as far as we can go.
Well, great. So I want to talk about one of the things that you mentioned. I think you called it kind of a short-term loan. That you made to residents. I think the lingo that everybody is starting to use right now is flex payments. And
right.
So I want to talk a little bit about that. We're entering an economic period where there's a lot of uncertainty. Inflation has been through the roof. We're coming, off the heels of a 2-year pandemic, and lenders that did workouts for businesses, and the government has helped in to help businesses keep their employees hired. a lot of that stuff seems to be coming to roost now.
Mm-hmm.
We're by some people's definition, we're now in a recession. And
Mm-hmm.
an interesting stat I looked at back in May, 36% of small retailers reported that they were not able to pay rent. And, which to me, that means they choose to make payroll over paying rent.
Right.
And, these are your small retailers. And we're not talking about your Gap, Old Navy kind of thing, but, the person that has the local boutique or, a restaurant, on Main Street. Those are the type of people that we're talking about from this statistic. And, and when they choose not to pay rent, it's typically because they've got, other things that are more important, mainly being payroll. And,
Right.
as we move into the fall, a lot of those companies are starting to say that, they're going to have to permanently close if things don't change. And you've even got companies like Microsoft and Google that have made recent announcements about cutting jobs or freezing,
Mm-hmm.
new hires and that type of thing. And I think where I'm going with all of this is, a lot of students who pay their old rent, will likely face some job insecurities going into this next year. And I think a lot of their parents will as well. It doesn't mean that they can't find a job. We all know there's plenty of open jobs out there, but it likely does mean that they may have periods where they just can't pay rent on time.
Right.
As much as we like getting late fee income as property managers, at the same time, I don't want to punish residents who, they may just need a little bit of flexibility
Yep.
in their payment plan. And I think that's where Qira's flexible rent solution, really shines. And so can you explain a little bit more how that works?
Yeah. So, and it's not always about that people just can't pay the rent. It's just kind of to your point, they just can't pay it today. They just need that little bridge to get them to their next paycheck because so many people are living a paycheck to paycheck right now. And so, 3 or 4 days can make a huge difference in avoiding late fees. And, when you talk about student housing, this one really hits close to home to me because my youngest son leaves in a couple of weeks for his second year at Auburn. And he's moving off campus. He's going to be living at the Standard at Auburn. That's a landmark property. So I'm right there in the mix of it. Fortunate for him, I'm paying his rent, but it's nice to know that, if something does happen here at Qira and, we need some help, that, we could go to a flexible payment solution and buy a little time. It really does help just bridge that gap. It's not a long-term solution. It's not something that people are going to take 2 and 3 months of rent loans in a row. It's just one at a time, and they pay it back over the next, 4 to 6 weeks or so. But it helps them avoid those late fees, which we know can be pretty costly. This is where, I always get the question about interest rates and, predatory lending.
That's where my head was at.
Yeah, exactly. I knew where you're going because that's where it goes. But our rates are very competitive. They're far lower than most credit cards. They're nowhere near what you'd call payday loan rates at all. But, they're reasonable rates. And the reality of it is most people are paying it off within 30 days. So the actual dollar amount that they're spending in interest is usually somewhere around $15 to $30. So far lower than a late fee and definitely not credit card rates.
Yeah. Well, what surprised me about, offering that is from a standpoint of, and maybe you could talk a little bit to this, but with ESG reporting, that seems to be, something that helps with that. I hate to call it an ESG rating or an ESG score, but it does help with that, reporting to investors that, the company, the property, the investment group are thinking about these things. And
Right.
I don't know if you've got anything you can expand on as it relates to ESG.
Yeah, I'm glad you brought that up because I'll be honest, it's not something that we've particularly thought about in the industry until recently, and now there are full conferences based on ESG. And from a property standpoint, even if none of your residents end up using a flex payment solution, although they will, but if they don't, just the fact that you offer it, make it available to your residents as an amenity, also shows that you are doing the right thing because you're giving people tools that can help them stay in their house. So it definitely is going to help that ESG score. We also have another product, not to change the subject, but our security deposit alternative, the same thing. It's the right thing to do to offer to your prospects.
Yeah, and I'd like to talk about that next, because I think
Sure.
that's one of the things when I was looking at the services that you guys are providing, that I got really I kind of had mixed emotions about it
Mm-hmm.
initially, because I kind of wanted to tell Qira, you're probably wasting your time in student housing with security deposit alternatives,
Yep.
and for the biggest reason that we've pretty much eliminated security deposits in
Right.
most of these markets. And here's the reason why: it gets in the way of our pre-leasing velocity. We are now
Mm-hmm.
pushing 10, even 14 months in advance of students and their parents signing a lease agreement for the next year. And
Mm-hmm.
if there's any speed bumps, it's typically going to be money.
Right.
And everybody's concerned with getting the students mentally locked into, this is where I'm going to live next year. And so because of that, we've opted to either get some type of reservation fee, or
Mm-hmm.
they don't pay a security deposit until right before move in. And I think for the most part, folks have just said, look, we'll get a reservation fee or some type of cleaning fee to help offset turn expenses, and we'll step away from the security deposit thing, which I think is a huge discredit, in a lot of ways. But I think there's also a lot of money that's being left on the table, and for a lot of different reasons. But just think about when that student moves out. You'll end up having a few of those residents that will go beyond normal wear and tear, and now you don't have a security deposit at all, to
Right.
charge against, and those damages, you've now got to go collect that from the tenant who's already moved out, and
Mm-hmm.
they're typically not thinking about what that may end up doing to their credit score, or anything else. They typically think about it, 2 years down the road, when they go off and buy their first car and get a loan without mom or dad, co-signing. And then all of a
Right.
sudden it comes up that, I owe my old apartment community $500. You got to go take care of that before you buy this car. So,
Right. You
um,
mean 20-year-old kids aren't thinking about the future? And
no, neither are the 21-year-old kids.
exactly. Exactly. So, again, I mentioned my son going to Auburn. I just went through this process, and he wanted to move off campus, and I can't blame him, because now these resort style apartments are just incredible. So I was expecting, I was going to have to write a check for $1,500 or something as a
Yeah.
deposit, and then it turns out it's $100 registration fee, which is nothing. Which, great, good for me. But I started wondering about the property. They're taking on this risk of damages and not being able to collect, just to help speed up the leasing process and eliminate hurdles. And so that's where the security deposit alternative comes in. You can have both. So you can tell the students, hey, you don't have to put a big deposit down. In fact, you don't have to put anything down. But at the same time, the landlord the owner not only doesn't have to take all that risk, with Qira, they get 2 times the amount of coverage that they would have with a traditional cash-based security deposit. So if if it's $1,000 deposit, but you're using Qira, now at move out, the owner can make a claim of up to $2,000, and it can be used for damages or unpaid rent. And I know there are a lot of other security deposit solutions out there. Most of them are insurance or they're bonds, which makes your claim process a little trickier and takes longer. And that's why we went with the cash-based solution. So that when claims are made, we typically pay in under 48 hours, sometimes
Oh,
even
wow.
faster. Right, exactly. So the turnaround time is really fast, and we make it very, very easy. So you can still have that velocity and lease up, but you also can mitigate your risk and, in fact, get double the coverage that you would have had otherwise. So really don't see a downside to that. One other thing to note, sorry, we talked about the social side of it, but also there's a legislative side of it. Some states are already passing regulations mandating that owners offer a solution that isn't cash for deposits. So
Oh,
it's
interesting.
coming. So, we're seeing an uptick in people trying to get ahead of that because it's coming everywhere soon.
Yeah. So I know what is probably going through the heads of a lot of property managers when they hear this, because they hear double coverage and they're like, oh wow, that checks a box for me. And then they're hearing paid out within 48 hours, and that checks
Hmm.
an obvious box for them.
Right.
But I do, to go back to those managers who currently aren't charging, a security deposit, or maybe they're charging something that's, maybe their rent is $800, $900,000 a bed, but they're charging like a $250 security deposit or $300 security deposit.
Right.
What kind of, and I don't know if you guys kind of hold their hand through this process, but to make that change, because I think most managers, if they were going to charge, an actual security deposit, it's probably going to be, pretty close to 1 month's rent, maybe as
Right.
much as 2 months rent. Is that kind of the guidance that you give them of setting that in order to, understand what they'll be able to, make a claim for later in the future?
Yeah, it is. Generally, we say take 1 month rent is your number. So using your example of $900 per bed, that'd be a $900 deposit, and then the amount, the monthly fee for the alternative is a percentage of that. So let's say it's roughly $10, just round numbers, and that so you could either have that as a separate line item that's paid, or you could just add it to the rent, and now your rent's $910. But you've got $1,800 worth of coverage, and the student didn't have to come up with an extra $900 before they could move in. So, it's a win-win.
Is that amount that they pay monthly, in that example, $10? Is that based off of? Is that just a blanket amount, or is there is it based off of their credit history? What is that? How's that determined?
Yeah, so we do some underwriting. Takes a matter of seconds when they're filling out the forms online, but everyone falls within that range. And for big portfolios, because we can spread risk across many beds, it's easier for us to just come up with a flat rate that we could apply to everybody within that range. And at that point, it's I don't want to say 100% of the people qualify, but it's pretty close.
Gotcha. So I know those two services, anybody is open to. You've got kind of
Hmm.
a next tier of services that you're able to offer for operators who are property owners who basically hand over just about every financial transaction that happens between between a resident and their landlord, which is to hand over that payment processing part
Right.
of it, and you're able to offer some other services at that level for those owners who want to do that. I want to talk to you a little bit about that, because you guys in that process you offer some. I don't know if the right word is soft collections, but
Hmm.
you're really becoming a partner to those managers and helping them with collections. And I
Yep.
think and I know you'll explain a little bit more about that, but I think this is for those in the audience who manage a small property and maybe you don't have that bookkeeper or you don't have that assistant manager that assists with collections, and it's all on yourself. Or even if you're what we refer to as the mom and pops, you're a regional or single market um,
Hmm.
uh, operator, and everything's kind of centrally located, and you're being very frugal with the way you run your operations. I think this is a really key important thing that you guys are able to offer. Can you explain a little bit about that, Brian?
Sure, sure. And since you mentioned the word frugal, it's a good time for me to say that all of the services that we offer the properties are at no charge to the properties. So, from a budget standpoint, it's tough to beat free. But you're right; it is called soft collections, and we can assist with I don't want to say chasing down the people who have moved out with a balance, but we do, and it's not a hard what you think of a typical collection agency. It really is a soft touch, and we try to work with the former resident to come up with a resolution or a payment plan. So that's just a service you get if you're using Qira for your payment processing. You basically get an extension of your team. So almost like you have free employees that are there to help you out with things like soft collections Or going back to security deposits, for any properties that want to maintain cash-based security deposits, we'll actually take on the management of those accounts for you as well. So, taking that workload off of your staff, so maybe you don't have to hire another part-time bookkeeper to help with those things. So it really isn't just about the software. It's really more like you're getting an extension of your team and having, outsourced employees that you don't have to pay for. Can be really, really valuable for those smaller operators or ones, or even if, you're just growing so fast you can't find employees, we're here and we can take some of that workload on for you.
No, I think that's fantastic because I mean, if you're in a situation where you have that ability to hand the payment processing over to Qira and be able to, I mean, because most payment processors, you never know them. There's no relationship at all.
Right.
It's typically whoever your property management system set up for you or your bank, dictated for you. So,
right.
Being able to, and I want to remind everybody, you do have a choice in that. And I think there's just a lot of added value because you've got the insight into, hey, is this person paid or not? And,
right.
Being able to follow up with those residents, even if I'm an operator and I don't change anything with my collection habits or my processes, being able to have you guys, in the mix, making another phone call, following up with that option of they can enroll into flex payments.
Right.
It's just a win-win for everybody. It's a win for the residents because they've got the option to not get a late fee or
right.
Be in a worse situation, and then also we're getting our money on time as landlords, and
right.
It's a win-win-win all the way around.
Absolutely.
So one other thing that I think I asked you, what was the one thing that kind of was unique to Qira, or what's the differentiator with you guys? And I was shocked at what the answer was. and I'm excited to kind of, let the property owners and folks out there know about this because I haven't seen this done by certainly any other payment processor and no one else that's working in the space. But you're actually able to help, an owner help with any type of maybe CapEx needs or something else where they need some type of loan that doesn't necessarily, warrant going out and taking on taking on some kind of second loan on the property or like that. Can you explain that a little bit? Because I'm really excited for folks to hear about this.
Sure. So, some people call it a short-term loan or a line of credit. But, if Qira is processing your rent payments for you, one of the additional benefits you get is access to this line of credit. So, if you need to put a new roof on or whatever it might be, instead of going to a bank and going through a lengthy process to get a loan that can take weeks, you can just go right online, a few clicks of a button, and you can borrow up to about 30% of the next 12 months of expected rent collections. And, we can fund these loans in a day. It's just that easy. And it's short term. If you want it to be a short term loan, you can pay it back in 90 days, which not a lot of banks don't want to do those types of loans, or you can take it out a year if you need to, really flexible payment terms with no prepayment penalties or anything like that. It really is designed to just be a quick and easy way for owners to get access to capital right when they need it.
So something I was just thinking of, and I didn't prepare you for this question, so feel free to say, Wes, I'll get back to you on this. But I am wondering, with the pre-lease cycle that happens in student housing, for example, I've got a client right now who's, set at 85%, for most of this past year. And there's some capital needs that, he would like to put in place. And I think he could take advantage of this or would like to take advantage of this. But at the same time, for next year, we've got them 100% pre-leased. Mm-hmm. The rates are much higher, 9 to 10% higher than what they have been this past year. Are you guys able to use that future rent roll to be able to make that same loan, or would they just need to wait until those residents actually move in?
No, we would absolutely be able to do that. That's where, student housing is a little bit, unique in the industry. But yeah, if you have those signed leases, but they haven't, they're not moving in till August, that's fine. We'll take all of that into consideration. Now, that might not be the 15-minute turnaround time on approving that one, but it would certainly be quick, a lot faster than a bank. But that's a great thing about our model. And because we have such great funding behind us, we have the flexibility to do almost any deal that we want to do.
Well, great. Well, Brian, I appreciate it so much, giving us this, behind the biz look at what's going on with Qira and what you guys are providing to not just student housing, but, the multifamily in general. I think there's a lot to be gained from it, and kind of a unique way of, of approaching payment processing for sure. Mm-hmm. And one, I want to ask you if there's anything else that you want to say before we leave, but is there anything else out there that, with Qira that you'd like to share before we sign off here?
Yeah, I guess the only other thing I'll mention is, there are other companies that do each of the little pieces that we do. But, we are the only ones that bring that under one roof. And so I think it could bring a value to our customers by managing their vendors better, having fewer vendors to manage, fewer integrations, getting your data all in one place. So that's kind of one of those little hidden benefits that we could bring to the table. So
great. Well, Brian, thanks so much. Again, we'll put all of the links in the show notes for people to follow up and get more information. And would also advise everybody to go follow Qira and Brian on LinkedIn. And yeah, I'm excited about what you guys are doing. Yeah,
it's going to be an exciting couple of years coming up. And Wes, thank you so much for letting me be a part of your podcast.
Well, thanks so much for helping sponsor this year, and we're looking forward to working more with you.
All right. Thanks.
Well, guys, there you have it. Thanks so much for staying to the end. I can't talk about enough good things with Qira. We've got some other things that I'm working with them on that is, if we're able to bring it all to fruition, they're going to be the best thing out there for student housing when it comes to financial transactions. So keep them on your radar, and certainly reach out to them if you're currently looking for someone with those services, or you want to find somebody that might be providing those services with better terms. Reach out to them. Okay. All right. So a couple of announcements. One, by the time this comes out, I may or may not be in Philadelphia for the BizNow conference, but that's coming up on the 13th in case you hear this episode before the 13th. Would love to see you if you're going to be there. And then at the end of the month, we've got the annual National Multi-Housing Council Student Housing Conference, and it's in Miami. It's down in South Beach this year. So if you haven't been to one of these before, go back and listen to our last episode, or maybe 2 episodes ago, where we went through the whole fall conference lineup. This is one you don't want to miss, especially if you're a C-suite executive operations person. This is the one that I would say you've got to get to out of all the national conferences. And then also, if you're on the biz dev side, that would be fantastic. Site level folks, it's expensive, right? It's $1,200 if you're not a member of NMHC, which is pretty hard to do. If your company is a member, they typically get so many free registrations per year anyway. So maybe if there's something spectacular you've done at your property, maybe you leased up within 60 days or something, and your company wants to kind of, pour into you, some continuing ed and kind of reward you. Hey, I would certainly say, hey, this is one that you want to check out. And then also, September marks the return of Shop Talk. If you're not familiar with Shop Talk is a monthly webinar that Student Housing Insight produces and we host, but it is not, it's not our thing. This is actually something that started back at the beginning of COVID with a monthly Zoom call. Well, it was actually like 2 or 3 times a week call that was happening across all of the leaders within student housing, certainly from the operations side, but also from an ownership side as well, to, talk about how the industry was going to be responding to the things that were coming out with the pandemic and the lockdowns, and that evolved and kept going. And so back in January, February, a couple of those folks came to me and said, "Hey, we don't know if we want to continue doing this or not, but if you've got some content, we would love to talk to SHI about providing some content." Long story short, we ended up having a conversation just saying, "Hey, why don't we take this on and provide this to the industry?" So we branded it Shop Talk. SHOP stands for Student Housing Operations. And that's every month. It's typically the second Tuesday of every month at 1 p.m. Eastern. This month, because we've got the conference in Philly on the second Tuesday, which is the 13th, we're going to be doing it on September 15th. So if you're listening to this when this comes out on Monday, that's this coming Thursday. If you want more information, go to shoptalk.info. Again, that's shoptalk.info. And you can register there to receive emails and updates. And you also see a calendar invite that you can click on the website and download that to your calendar so that you get alerted for it this Thursday at 1 o'clock. All right, guys, thanks so much. Look forward to hopefully seeing some of you guys soon, and we'll talk later.